afternoon. It's Thursday, 11 a.m., and that means it's McCollum on business time. That's right. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world today. We have tons of updates for you. Of course, yesterday after we went off air, the Fed meeting minutes come out. It's a little bit of an update on the battle that was happening behind the scenes with the last Federal Reserve meeting, of course, voting on keeping those rates the same. We have that coming your way. Local stories, including one, folks. If you're into these stories where we talk about where we do the weird things you can get out there. How about iced tea gloves? Iced coffee gloves, I should say, not iced tea. We'll get into that here in just a little bit. Plus, summer's coming up here. You might be starting ready to get your pool ready for the summer. Well, pay attention to this because a local company that's fairly large making some changes as well. So we'll have that coming up for you as well. And with all that being said here, let's get into that market watch. Before it pops up, I'll just tell you stocks are sliding today as well. Everything is down, no doubt about that. Everybody's looking at Walmart's earnings. We'll talk about that here in just a second as a stock we're paying attention to. Obviously, the big waiting thing, though, is the potential Iran conflict that is just hanging over the world right now. Yesterday, oil prices went up about 3% off of the rejection of Iran not following kind of what the rules were for America here. So now, unfortunately, war is not off the table there, and that's obviously rolling the markets as well today. Dow Jones is down to 387 points right now to 49,254. So we're below that 50,000 kind of number that we've been over the last few weeks for the first time. Well, at least a week and a half or so. So 49,266 right now for the Dow Jones. S&P 500 also down 33 points to 68.42. The NASDAQ link is broken, so I apologize, but I'll tell you, it's down 124 points right now to 22,829 for the NASDAQ as we are speaking. And then the Russell 2K, that small cap index, it's down 16 points right now. It's down to 2640 for the Russell 2K. And then Bitcoin technically down today, the 28 points. So basically it's flat, but folks, it's still hovering around what it was at the end of the show yesterday, 66,000 level, 66,412 for Bitcoin here today. Bitcoin it's found its little comfort level here, and we'll have to keep our eyes on that as we keep moving forward. And stocks we're going to pay attention to, well, everybody's looking at Walmart's reporting as that did come out, and that's the first stock we're going to pay attention to here today. They reversed pre-market losses earlier today. And then Walmart did trade slightly higher as the day had moved on, and now you can see it's at 0.02% right now, so basically even as well. Investors are investors were kind of guessing in pre-market trading that Walmart's forward guidance is merely too conservative is what they think it is, meaning they thought it should be higher. Walmart said it anticipates net sales to increase by 3.5% to 4.5% and adjusted earnings per share to range from $2.75 to $2.85 per share. Analysts out there, well, they were expecting guidance of $2.96 per share. And it's not that they can't do it. It's just the market thinks Walmart was being too conservative. So pre-market trading, went up. Then it kind of sold off a little bit. And now basically even here, Walmart here today, based off of that future guidance and kind of the concerns that they got a little too conservative with it out there. But one of the issues with the market today is that. And then let's go look at that buy now, pay later service called Klarna out there. They are, buy now, pay later. You guys know about these guys, but look at this, 26.49% down today. I bet you some of the investors that bought it 27% ago, wish they would have bought now, pay later, kind of a provision as well for this stock out there. Yeah, down a big today, 26.49%. Its guidance fell short of Wall Street's expectations level. Klarna called for first quarter operating income to range from $5 to $35 million. That's quite the range there, a $30 million difference as well. The consensus, by the way, is $61.9 million. So even if you take the high end of their range at $35 million, still way short of the consensus estimate out there from the investors. Fourth quarter operating income was $47 million for them. It missed the mark, of course, as you can tell, being down this much. The investors and analysts, well, they're expecting $57 million in operating income. So missed that by $10 million. You miss numbers by that much, well, you're going to get pounded on the stock market, and that's what's happening. 26.52% down for Klarna as of right now. And now let's go to the defense contractor here. They have a presence here in Arizona, but let's go look at Lockheed Martin. They do a lot of stuff, right? But their primary service here, they're the primary contractor for the Patriot air defense missiles. Well, keep in mind, Lockheed Martin's up 2.24%. There's some stuff going on over in Iran right now in the Persian Gulf. Well, right, Patriot air defense missiles, yeah. One of the reasons why Lockheed Martin's up this 2% today as well. So they're up 2%. It's at an all-time high, Lockheed Martin is as well. Interesting enough, if you go back to the last 3 months, their 3-month gain is at 41% for Lockheed Martin as of today with this 2% increase as well. Speaking at a Citigroup investment conference earlier this week, the Lockheed Martin management did point to rising global demand from the U.S. and allies for those integrated air and missile defense ones that they are the primary makers of the Patriot air defense systems. So forget about the 2.24% it's up today. Think about the last 3 months here, 41% increase here in this stock. And it's all because of the spending. We talk about this all the time here on McCollum on Business, right? The spending, not just the U.S. spending, but U.S. Friendly companies to the U.S. are also increasing their demand for these missiles and things that we produce here in the United States. So good news for Lockheed Martin, no doubt about that. Later on, when we come back and look at the stock market, well, we'll look at Deere, obviously, John Deere company. They're they make farm stuff. To be specific, we're going to look at DoorDash, you know them, the food delivery company, and we're also going to look at Etsy as well as their stocks making some moves today of something that they unloaded. They got lesser today as well, so we'll look at Etsy coming up in terms of the stock market as well and stocks we're paying attention to. But let's get you updated here first, right? The Federal Reserve and their policymakers, they met last month, and now their meeting minutes came out yesterday after we went off of air. Yeah, well, those policymakers were mostly in agreement on the decision to leave interest rates unchanged in the last meeting. Though, 2 of them did call for cuts, but several of them, majority of them, signaled that rate hikes could be on deck if inflation continues to remain elevated, and it's remaining in that 2.7, 2.8% range. So it's staying at that level. So the minutes for the January meeting of the Federal Open Market Committee, which is that FOMC you always hear about, they were released yesterday after we got off air, and they showed that some policymakers were in favor of including language signaling the possibility of future rate hikes. Of course, they're trying to tame the stagnation that we have out there, stubborn inflation that's happening in this market. So they were hoping that just putting that language in there would kind of whip inflation down a little bit as well. So as I told you, 2 people dissented from leaving the same. So it was a 10-2 vote here by the FOMC to leave those federal funds rate and the benchmark one there at its current range, which is 3.5 to 3.75%. No shocker here. Christopher Waller, that Fed governor, and Stephen Moran, they both dissented. They said they dissented because they had concerns about the labor market as well, as long as, on top of the inflation remaining elevated above that 2% target level. So the inflation level where it's at is what is making the other ones also kind of pause on further rate cuts. So we're kind of in a tug of war right now. The minutes also noted several policymakers commented that further downward adjustments to the target range for the federal funds rates would likely be appropriate if inflation was to decline in line with their expectations, is what they signaled in that meeting minutes as well. So it's all about these meetings are very well watched because it signals kind of what the Fed wants to see as things keep going on. So we have that clarity here as well as it's gone on. And then we also got some tariff news yesterday as well. And we're going to look specifically at mid-sized U.S. businesses here because tariffs paid by those mid-sized businesses here in the U.S., well, tariffs have tripled those payments over the course of the past year. This is all new research, and JP Morgan Chase put this out as well. It came out, I believe, early this morning. It was either late last night or early this morning. But it is evidence that President Trump's push to charge higher taxes on imports, well, it's causing economic disruption, is what people are saying about this reporting. The additional taxes have meant that companies that employ a combined 48 million people here in the U.S., those mid-level companies, these are the kind of businesses that Trump had promised, to get back and revive them into more successful levels. Well, these companies have to find ways to absorb the new expense of the tariffs, which means passing it along to customers in the form of course, higher prices. Even that's you can also do it by employing fewer workers, or of course, just eating the costs and accepting lower profits as well. Those are pretty much your options out there. The research did not say, though, how the additional costs of these companies are getting are flowing through the economy. All it did was it indicated that tariffs are being paid by these U.S. companies. The study is part of the growing body of economic analysis that is out there that is going against administration, right? President Trump's claims that foreigners pay the tariffs. JP Morgan Chase Institute is who work together to get this report out. They use payments data to look at businesses that might lack of course, the pricing power of those large multinational companies to offset tariffs. Like the big companies are able to offset stuff, whether they can eat it a little bit easier, they can pass it around smaller amounts, but still pass it around, or they have the negotiating skills to just negotiate smaller rates, right? Things to that effect. But they don't have, these companies don't have that ability of the multinational companies. But these companies that they kind of did this reporting, they may be small enough to quickly change supply chains to minimize the exposure to those tax increases. Big companies do not change supply chains easily. It's like a boat trying to turn around. Smaller companies can easily shop around the supply chain and move to another cheaper option as well coming up here. So these companies that they looked at tended to have revenues between $10 million and $1 billion, all fewer than 500 employees out there as well. That's what they consider the middle market of a company. The analysis does suggest that the Trump administration's goal of becoming less directly reliant on Chinese manufacturers, well, that actually has been happening with all of these companies as well. Payments to China by these companies, these mid-tier companies, they're 20% below their October 24 levels. But we don't know if that means that China is simply routing its goods through other countries or if companies have actually moved their supply chains as well. So, like China shipping them to, a more friendly tariff country, and then it's coming over here, or if these companies are finding, you know, suppliers not in China for those high numbers. But interesting story there for the mid-level companies out there in the United States, and just another follow-up for you here. Now, this one's not doesn't have to do with California. But make note, another large company moving to Florida, folks. Yes. And these all technology companies are making these moves over there to Florida. And this time we're going to talk about Palantir. They're a AI innovator, huge company, lots of government contracts out there. Well, they announced in a post on X the other day that they are moving its headquarters or have moved its headquarters from Denver, Colorado to Miami, Florida. What's interesting about this is their second move out of a jurisdiction. We'll talk about that in just a minute. But according to Palantir's latest SEC filings, the principal executive office is now located over there in Aventura, California. That's where it's at. I'm sorry, Florida, not California. Aventura, Florida. That's an affluent area just 20 miles north of downtown Miami. So this is Palantir's second major move in 6 years. Yes, they did leave California at one point. About 6 years ago, they left Palo Alto, California, which is up in the Bay Area, for Denver. That was in 2020 is when they did that. The CEO at that time, Alex Karp, he previously cited a clash between Silicon Valley's values and the company's missions. They went to Denver, another left-leaning politics city over there, and now moving over to just outside of Miami there as well. So another story here is we're paying attention to these big, large companies making movements to more friendly, business environments over there in Florida as well. So just a little quick follow up for you. Another follow up here. Speaking of California, remember several months ago I told you Tesla was going to try to get hit, and the California DMV was trying to hit Tesla with that 30-day suspension of its dealer and manufacturing licenses there in California. Well, Tesla's going to avoid that officially now, coming up here. Why? Well, Tesla did comply with the state order to stop using the term autopilot when marketing its vehicles. This is the whole battle behind it. They used autopilot in all the brochures. California's DMV says, well, your cars don't run on autopilot. You can't use that. Tesla was fighting them, and then this threat came out of, hey, you're not going to be able to get cars sold here anymore. Well, on Tuesday, that all went away because Tesla decided to stop using that word autopilot as well. This decision comes after the California Department of Motor Vehicles found in December of 25, as I told you, Tesla violated state law by marketing that autopilot deal and full self-driving, those specific terms. So what they said was on Tuesday that Tesla's did take corrective action and it stopped using the terms autopilot. And they even noted Tesla also modified its use of the term full self-driving because they actually are clarifying that one. They stopped using autopilot. They clarified full self-driving by saying that driver supervision is required from that perspective. So the shutdown, because what would have happened is they wouldn't have been able to sell any Teslas in California. It's a big market for them. Avoided now because of kind of a relenting there by Tesla as well, is what we're looking at. And I'm remarkably surprised here at kind of the relaxation of things that are happening from the government or government that's supposed to be looking over things for us. Now we got the FDA making some more regulation changes here. And this time it has to do with how new drugs get approved out there. The Food and Drug Administration is going to drop its longtime standard of requiring 2 rigorous studies in order for drugs to get approved, new drugs to get approved here in America. This is the latest change from the Trump administrations. Why are they doing this? Well, they are vowing to speed up the availability of certain medical products and get them out into the market. The FDA's default position moving forward will be to require 1 study for new drugs and other novel health products, as we're looking at. So 1 study now as well. By the way, this was all published here in the New England Journal of Medicine by the FDA head people yesterday as well. The announcement in the latest example, they're changing longstanding FDA standards with this announcement. And the stated goal, as I said, is to, according to them, slashing bureaucracy and accelerating the availability of new medicines. That's how they're justifying this move. This isn't the only change they've done, because since arriving at the agency last April, the head of the FDA, Mr. McCary, he's launched a series of directives that he says will shorten FDA reviews. I think he's a doctor, to be honest with you, but I didn't go to doctor school for 6 years to be called Mister. Yeah. One thing they did change was they they started mandating the use of artificial intelligence by staffers. They even offered 1-month drug assessments for new medications, and even that specifically serve the national interest out there. That's what they do. So some changes in the FDA on new drugs. I don't know how to feel about that one. Sometimes I say that it is hard to get new drugs approved, harder than it should be. But at the same time, right, aren't they protecting us instead of getting them rushed through to find out big things later on as well? And just a note here, if you or anyone you know is wanting to or are going to attend driving schools in the U.S., and this is specifically for, truckers and bus drivers out there. Well, about 550 commercial driving schools here in the U.S., folks, that train truckers and bus drivers, they're going to have to close. Yeah. Why? Investigators found they employed unqualified instructors, failed to adequately test students, and then just huge amount of safety issues out there. Boy, does that make you feel safe on the road. This is all according to the Transportation Department. They announced all this earlier yesterday. The move marks the Trump administration's latest effort to improve safety in the trucking industry. So, last fall, they decertified up to 7,500 schools at that time. It's a little bit different here. But back then, they decertified the schools because they included many defunct operations, ones that were already closed or on the verge of closing as well. But this one here is active schools that they went after that are still working because of the shortcomings they have as well. They did 1,426 site visits in December to come up with this conclusion as well. The department has been aggressively going after states that handed out commercial driver's license to immigrants who, can't read English, can't figure out signs and everything, and they never would have qualified for these driver licenses and everything. This all is from those fatal crashes that happened, and it kind of led to this as well, is what we're looking at. So they're closing the training schools because the trainers aren't up to it as well. So to all stop these fatal crashes that are happening with this and everything. But so if you look at those schools, one, your school might not be around much longer. But then two, right, it's going to make it harder for other schools to kind of get up into it. 448 schools here that they're forcing to close. They failed to meet basic safety standards. Things like employing unqualified instructors, failing to test student skills, or even teach them how to handle hazardous materials. Yeah. They even used the wrong equipment to teach drivers out there. That's 448 of them. 109 of the schools being there did remove themselves from the registry of schools when they learned that inspections were planned. Yeah. What? Inspections are coming. Let's just shut our doors because we're not qualified to do it. This is, to me, scary, folks. Scary stuff out there, folks, on what's happening on the road. So just be safe and be aware, right? Keep your distance. Give yourself enough time and all of that stuff as well out there on the roadways, especially as spring break's coming up. A lot of people will be traveling, things to that effect as well. And now, Nestle, it's one of the world's, if not the world's biggest food and drinks maker. It's definitely one of them out there. They came out this morning and they said they're in advanced negotiations to sell its remaining ice cream business. Now, they're going to sell it sort of in-house. They're going to sell it to its joint venture partner, a company called Froneri. Froneri. So it's a joint venture partner, but Nestle's saying they want to get out of the ice cream business, right? This division that Nestle's trying to sell to them, or is going to, it includes the brands of Haagen-Dazs. Drumstick is two of the bigger ones there as well. Not Klondike. Forget the other ones here. It'll come to me during this story. But it's valued just shy of 1 billion Swiss francs, which is about 1.3 billion US dollars. Nestle plans to sell the brands to that Froneri, which is a UK-based company, over the next year. They are going to remain in the joint venture, though, so they'll still have it. They just pushing it, selling it all over to that company. Why is Nestle doing this? Well, by the way, it just came to me. Nespresso, Kit Kat bars, that's all Nestle. That stuff is what's being sold off. Well, they look to boost sales and simplify its operations under their new CEO that just came on board here last year. So big sale there for that, and ice cream changes coming up here, folks. Keep your mind on that with Nestle coming up here. And when we come back here, we'll get into the local stories you need to know. I already told you here at the end of the show here, we got a story on, you want some iced coffee gloves? I'll tell you how you can get your hands on that from Dunkin', or maybe they're sold out by now. We'll take a look at that here coming up as well from that perspective. Well, an NFC West foe is on the cell block here for the Cardinals. I'll fill you in on that as well coming your way. We're going to go to the Phoenix New Times coming up here. Yes, home prices, according to them, are dropping more than almost any city in the West here in Phoenix. New Times had that report out there. We'll get into all of that. Come on back. McCollum on Business. And we're back here, McCollum on Business, having some fun here on this Thursday edition. Of course, you just saw there, right? The main event in the can for the day. Uncle Lou joins us here at 9 o'clock. We talk college baseball, Olympic hockey, UFC fights this weekend as well. Catch it on demand right now here at Robat TV, of course, on the YouTube page as well. Free podcast system. Just search at TME Sports Show or type in the main event with Steven or the main event with Dale. It will pop right up for you on your favorite podcasting system out there. It is now available and everything. Join us tomorrow morning live, 8 to 10 a.m. here at Robat TV as well for the sports programming as we get you ready for the weekend. Of course, as soon as we're done here, well, we put this up on demand at Robat TV as well as on the YouTube page of our production company there as well. Come and join us. No podcast for this show out there. Pit stop for this week, right? Daytona 500 wrapped up last week. Only one show this week because of the holiday on Monday. So while we look back at the Daytona 500, we'll look ahead to Atlanta, Echo Park this weekend here for NASCAR as well as we're getting into race 2 here on the season. That'll be up about 2 o'clock here today, here on Thursday, and get you ready for this weekend of racing there in Atlanta. And, of course, The Real Matrix, new episode Friday, 10 a.m., tomorrow morning, 10 a.m. here at Robat TV. At noon, it'll be up on the Rumble page for TME Media. Now search The Real Matrix or TME Media. It does come up there on Rumble. Check out the programming there. 17 episodes are up. Last one was about the Fed. This week, I'm not going to lie to you, I don't know what this week's episode's about. I haven't looked into that yet. But free podcast system at The Real Matrix on your favorite podcast system. Catch it on Rumble as well. And then, of course, here, Robat TV, 10 a.m. on Robat, at noon everywhere else. Tomorrow, Friday, for The Real Matrix. The Angry Fan just wants you to join in with a positive attitude and a nice open mind here to listen to what he has to say with what's happening in the world out there. And, folks, let's get right back into this with the Market Watch. Pretty basic. Nothing has changed. There's a big sell-off happening today. People are trying to figure out and assess Walmart's earnings. Well, the potential Iran conflict is weighing over the market as well as now, unfortunately, war or some sort of military strikes are not off the table for Iran here yesterday and today as well. And everything's down because of those issues. 415 points down for the Dow Jones here so far. S&P 500 is down 37 points. The NASDAQ, sorry for the link there. We're waiting for them to fix it. It's not us. Well, it's down 143 points right now for the NASDAQ. The Russell 2K is down 17 points here today for that small cap index. Bitcoin, well, it's flipped. It was basically even, right? It was 28 points down when we looked at it earlier. 313 points up right now, 66,743 for Bitcoin, but just hovering in that 66,000 range there for the Bitcoin cryptocurrency. And get used to it there, folks. I have a feeling there's not going to be big valuations or fluctuations by them at all. Stocks we're paying attention to right now, let's look at Deere, right? John Deere Company is what we're going to look at. You know, they sell farm equipment, all of that stuff, up 13% here today as well. They posted, they basically beat analyst expectations on both earnings per share and revenue lines out there. So that's why they're up this 12.96% right now on your screen. Deere reported first quarter earnings of $2.42 per share. Their revenue was $8 billion. The expectation was only $2.05 per share. So I'd say that's a beat. That's a pretty big increase there. Their revenue expectation was $7.69 billion. They came in at $8 billion. So John Deere as tractor business is good right now for Deere, and they're up 13%, basically 12.93% today, based off of that positive news. Now let's go to food delivery or any type of delivery service, because I know they do more than food. DoorDash is what we're going to look at, and they're up today 3.47% right now. They were up over 4% earlier today. DoorDash reported that its orders increased 32% in the fourth quarter from the previous year's fourth quarter. Revenue was up big also, 38% for DoorDash as well in that same quarter. However, with that news, and this is kind of shocking, Yeah, their fourth quarter results, earnings per share and revenue, both missed estimates out there, folks. So big increase in numbers and everything. That tells you a lot of expenses hit them as well, most likely, as what was happening. But 3.47% up, even though with that news, DoorDash is here today. And then let's go to the online site there, Etsy, and look at their stock here today. And it's up 11.78% right now. They announced plans to sell Depop. That's a consumer to consumer fashion marketplace that they own, where they're selling that to eBay, both companies announced. And it's being sold for $1.2 billion in cash. So eBay is buying Depop. The sale's subject to certain pricing adjustments out there. So we don't know the final number, but as of now, we know it's going to be around $1.2 billion as well. Etsy's also announced that their earnings per share, well, is 92 cents per share. Their estimate was only 84, so blew that number out of the water as well. Their revenue, though, $882 million, missed the estimate out there of $885 million. But Etsy also unloading that consumer-to-consumer fashion marketplace, Depop, to eBay for just a cool $1.2 billion, folks. That's all it takes to get out there. Hey, speaking of, I announced on the main event, I'm telling you guys, you want to get in on this opportunity? I'll give you guys here at McCollum on Business. I know a lot of you watch both shows, and a lot of you are just one or the other, but I'm gonna give you the same opportunity here with an opportunity. Check your money, check your seat cushions and everything. Every dollar counts. Folks, we're going to make a push here for the Seattle Seahawks. All we need, we're going to do car washes, bake sales. Everybody's going to check their underneath their seats of their cars. All we need is somewhere around $9 billion. We're going to try to put this together. Yes, the NFC West opponent here of the Arizona Cardinals and Super Bowl winners here just a couple weeks ago, the Seattle Seahawks, are officially going up for sale now. We heard the rumors before the Super Bowl that it was going to happen and everything, but it's all in accordance with the wishes of their team owner who passed away, Paul Allen. The good news is a lot of this and most of this money in the sale is going to go to charities out there. But Allen's estate did announce yesterday that it's begun the process of selling the team, which perfect timing by winning the Super Bowl last year. That's going to add the amount up. Storied franchise there in Seattle on top of it and everything. Nobody made comments about it. They just announced it on social media. There were going to be a sale as well. So they say it's valued at $6 billion. These things do not come available very often. The question I got, it's going to go for 7, 8, 9 billion. My question is, will it get to $10 billion in sales is what we want. So if you want to get involved, just so you know, we're joking here. But unless we have one heck of a car wash, we're not going to come close to that number. But, so I can just imagine, the excitement to get out on this deal. But yeah, so Arizona Cardinals could have. Now, is the new owner going to be more, Jerry Jones, young? Well, Jerry Jones isn't young, but a young, up-and-coming, go-get-'em type of an owner? Or is he going to be more like the Carolina Panthers owner, right? Billionaire with all that stuff, but just medals all the time, and his team's not very good. Which owner is the Seahawks side going to go to is the bigger question there in terms of the sports worlds out there. And look, we're starting to warm up, right? I know we cooled down over this weekend, but over the next several months, we're going to head into our summers. Is your pool ready to go? Well, pay attention here. Not all of them are in Arizona, but they are based here. We're talking about Leslie's Pool Supply out there. They announced that they're closing. They have already closed, 80 underperforming stores. They even closed a distribution center over in Illinois as well. They're trying to do a very fast restructuring of their company ahead of this year's pool season. Well, they're losing a lot of money and struggling as a company because of the loss of those monies. These shutdowns were completed in its first fiscal quarter. Company is moving to reset their operations. I did a search, and they're everywhere, like on every street corner here. I don't know if any here were closed, but I just want to make you aware of it in case you just run down to your neighborhood one. I got like 3 within like a mile radius out where I am. They're still all there. At least their signs are still up for them as well. So the closures did cost Leslie's a $10.1 million non-cash impairment charge. They did report a quarterly net loss of $83 million and an adjusted EBITDA there of negative $40.3 million. Yeah, they were trying to reduce their inventory, cut slow moving products, is what they were trying to do for a lot of that stuff out there. So, trying to revamp the company here, get more profitable moving forward for them, and they need to increase their margins, right, on that side as those costs go through the roof and everything. And if you've been in a Leslie's when it's busy, you just turn around and walk out because they only have one or two people working, and they're and rightfully so. They're doing their job. They're checking with everybody, but they just simply can't hire a bunch of people in these stores. The margins are not there for them as well. And we're gonna go to the Phoenix New Times here for this story here that we're gonna talk about, and that's because they're reporting the Phoenix housing market is just getting weirder and weirder out there, right? Compared to many other cities in the western part of the United States. Well, our home prices are actually a bargain, believe it or not, here in the Phoenix area. We, of course, don't think so. We know how much expensive the prices have gotten, but compared to those other Western cities, we're actually a bargain here, folks, like we have been in the past as well. We are becoming now affordable is the question mark here, but we are becoming more affordable here. Like I said, compared to our neighbors out here in the West as well. In November, a housing study found that nearly all of Arizona homes lost value over the previous year. Now, there's a new study out there from GoBankingRates.com is where that's coming from. They use Zillow data to show the downward trend. It's going to be here to stick around as well as we move forward. So, some positive, maybe some good news for you if you're in the market for a house or looking to move from your existing one out there. Well, bad news if you're going to sell a house. Good news if you're going to buy one is that is coming down a little bit there. So, if you're in the market, make you aware of that. We know interest rates are dropping as well. So, it's making some homes more affordable for people out there to move into as well. And hey, let's go up to Flagstaff here. And if you live up in Flagstaff, you fly out of Flagstaff Airport and things to that stuff, well, something to pay attention to here. And you want to get to Dallas Fort Worth, no more coming down to Phoenix, right, to do it. American Airlines is going to operate an Airbus A319 out of Flagstaff starting in May, by the way, to Dallas Fort Worth. So they're increasing the size of the airplane to get to, of course, Dallas from Flagstaff. The new flight will offer additional options for passengers. So it'll have first class seats, nearly double the capacity of what they currently fly on that route as well. So a heads up there, starting in May, for those of you that, because I do know people that live in Flagstaff, and when they go to fly, they do come down here because of the smaller planes, means a little bit more expensive. And not the amenities that you can get if you just drive 2 hours down here to Phoenix and fly out of Phoenix. So at least one airline is getting a bigger plane up there and fly. And that also tells you the demand is there as well for them. And finally, folks, here on this Thursday, we're getting closer to lunchtime and everything. And maybe you got your Dunkin' in this morning as well. But, we like to give you these types of stories out there. But Dunkin', iced coffee is kind of synonymous with them as well. But now you can keep your hands warm by not holding a drink. You can get iced coffee gloves out there, folks. Yeah. No more buying a drink. You can still hold the iced coffee drink, but your hands will stay warmer instead of having a hot drink. I screwed that up earlier when I said that. That's what I get for trying to be clever off the cuff, right? So Dunkin' is giving customers who purchase an iced drink on Friday, February 20th. Tomorrow, folks, make a note of this. It's a limited edition iced coffee glove. You see it on your screen there right now. So tomorrow morning, get in there if you want a glove. Now, I think you're only getting one glove, folks. The glove is only available starting at 10 a.m. local time tomorrow on Friday. That's only, of course, at participating Dunkin' locations out there and around the country. And it's only going to be while supplies last. So, you ever want a Dunkin' glove to hold your iced coffee so your hand doesn't freeze? Can you imagine doing that? Like it's summertime and you have the glove on because your hand gets cold. Yeah. Tomorrow, Friday, February 20th, 10 a.m. local time, Dunkin' iced coffee. You get a glove while things are there. It's free glove too, as well, by the way, as well. So no other thing other than you have to buy a Dunkin' iced drink to receive that free glove. Yeah. No code. You don't have to buy a large only. You don't have to, you know, buy donuts with it or nothing to that effect. Go get it. If you get a glove, let me know. Hit me up on the socials and let me know if you did get a glove. I want to see it. I want to see it out there for you. So there you go, folks. Go get your Dunkin' glove tomorrow. And hey, let's get out of here and go grab some lunch. Don't forget, Pit Stop still coming up today here, Robat TV, and on the YouTube page and on the free podcast systems. We're going to get that up and running here for you, get it uploaded, and get that posted here probably around 2, if not a little bit earlier. Just come and join me there. Of course, Friday, the main event tomorrow morning, and then McCollum on Business tomorrow at 11 as well. Come and join me, would you? Share all of our shows with your friends, either the YouTube page, the podcast systems, or, of course, here at Robat TV. We'd appreciate it. Have a great Thursday. We'll see you Friday, everybody.